you have a new book out, a book which is called Africa, Rise and Shine. What is the purpose of the book?
Thank you very much. Africa, Rise and Shine is now released at Amazon.com, and it's a book that tries to change the narrative of Africa. Hitherto, Africa has been portrayed as a continent of, if you will, hopeless continent, if you will, as far back as 20 years ago, 15, 25 years ago. It's a continent of wars, a continent of hopelessness, you know. That is a quote from The Economist magazine in 2001 and 2011. Front cover of Economist says Africa is a hopeless continent. But a decade later, they changed that narrative. They're beginning to see the bright side of Africa. They're beginning to see that Africa is rising. African economies are doing extremely very well, and they're beginning to have proper democratically elected government, from one civilian government to another civilian government. Before then, it was lots of coups, and they were making reference that Africa is a continent of coups, a continent of wars, but not anymore. The narrative is changed, and the businesses in Africa are doing very, very well. African economies are rising and shining. Hence, I thought to help to change the narrative of the perception of international community, international media about Africa, I needed to do a book, Africa, Rise and Shine, and also to tell some amazing stories of tremendous business opportunities in Africa, particularly Nigeria. That's the essence of the book.
But does Africa have a perception problem? Do investors always ask about politics and corruption instead of the underlying fundamentals of a business?
Yes and no. Yes, in the sense that because there has not been too many positive documentations about many countries in Africa. So the international media are completely uninformed, and they have the mindset that Africa is still a continent of wars, a continent of famine, a continent of hunger. But that's changed. They're beginning to change their mindset now. The paradigm is changing very rapidly. We've been having successful government from one government, civilian government, to another. There in my book, you will see in one of the chapters in my book, when I started to describe how African countries have now come of age, how African countries have led successful successful transition programs of one successful democratically elected government to another. That is what Africa is now. And many international media are beginning to appreciate that. So the narrative is changing gradually. And the business opportunities in Africa is also tremendous, particularly in Nigeria. And the GDP growth rate is rising very significantly, which many international investors are very, very pleased to hear about, and they didn't know about before now. That is why the answer is yes and no.
If President Buhari wins a second term, what does that mean for Nigeria?
If he wins, the economy, you see, one thing that business people, entrepreneurs do all over the world, whether it's Nigeria, whether it's in Ghana, whether it's United States or something, investors, entrepreneurs, business people like us, we love to have consistency. We love to have certainty. We want to appreciate the fact that the economy will continue to do well, regardless of who wins. Regardless of who wins, the economy must do well. And the most important thing is we all love consistency. What business people don't like, we don't like uncertainty. No one likes uncertainty. So if President Buhari wins, that is consistency, and the business community will also love that and all that. And definitely, regardless of who, but consistency is very important. The business paradigm will continue to be improved.
But Mr. Ovia, if you look, for example, at Zenith stock, right, it's down 30% since, I think, mid-January. oil price is going up. That's a benefit to Nigeria. So is it investors worrying about the presidential election? Is it investors worrying about a lack of continuity?
Now, regarding the stock market in Nigeria, the capital market in Nigeria mimics the international environment also. Nigeria is not an isolation anymore. It's not an isolated country. It's a country where you have international investors. When the interest rate is rising in America, of course, definitely, there's a capital flow to the U.S. economy. That's natural. And absolutely has nothing to do with politics, has nothing to do with election at all. Absolutely not. You will see that the capital market in some other emerging markets are also beginning to drop very slowly, just because interest rate is expected to rise in America and other well-developed economies. That affects it. It's the same audience. It's the same market. It's the same international market, the same capital market. Has absolutely nothing to do with election coming up pretty soon. And this is also very well covered in my book of the transition program, how various investors perceive investment in Africa, that they have nothing to worry about waiting until there's a new government. And after a new government, they say, okay, let's wait for a couple of more months or years before we can make our investment. They shouldn't do that. They should come in now. They should come in now and make their investments and all that. That's what gives some of us the opportunity to invest very quickly without necessarily waiting for any government to be elected or not elected. Take the risk and move on.
Mr. Ovia, what is the advice that you would give your younger self? So the book also goes from your beginnings and how you came to where you are now. Would you have done anything differently?
Well, I look at it, writing Africa Rising. Africa Rise and Shine. The opportunity we had at the time we started the bank, so other opportunities that other people had in other industries, was a matter of time and chance. Time and chance is that at that time, many people were scared to invest in Nigeria. They were truly invest because it was during the military. We're talking about late 80s, and actually, to be precise, in 1990. Many international investors were scared to invest simply because we were under military rule. And I mean, we were in military rule for 30 years up till within that moment up to 1999. So you could imagine the tremendous opportunity that existed in Nigeria and also some other African countries. But because we were indigenous people, if you will, indigenous Africa, indigenous Nigeria, we knew that meant nothing. We had lived through that. We know it doesn't really affect the economy tremendously, but definitely it's a matter of understanding what you do. The corporate governance issue had improved very significantly. So we were able to invest at a time of most uncertainty, where international investors were terribly scared to invest. So we also were waiting and waited patiently to reap the benefits. Hence, according to what had happened over those many years, the book have now addressed why there was a quantum leap and quantum benefit. Starting the business with 20 million naira at a exchange rate at that time of about 5 naira to the dollar, actually $4 million in 1990. That had now blossomed when I have a total asset base of 16 billion US dollars. If you look at the simple arithmetic, over 1,000% growth, thousands of percentage growth increase. You can't get that in any, even the best economies in the world, you are not going to get that kind of growth. You are not going to get that kind of benefits. So that's the kind of risk entrepreneurs, business people, international must take in Nigeria or any other African country and reap tremendous benefit in terms of quantum growth in their investments.
One very final question on the banking industry in Nigeria. Is it in a good place? Do you worry about non-performing loans?
Non-performing loan is always something that banks worry about anywhere in the world, whether it's a UK economy, whether it's an American economy. There are non-performing loans over the banking community, banking industry all over the world, we don't necessarily terribly worry, because it depends on how we also able to hedge against some of those risks that we take. It depends on which industry it is. If it's oil, if it's gas, if it's trading, we'll also be able to ameliorate those risks in those areas.